Let's take you now to the latest economic growth numbers, the ABS releasing the September quarter data. Ed Boyd is live with us. Ed, the government spending expected to have propped up GDP.
That's the big factor here, Kieran, that's expected to help GDP growth accelerate, at least in the September quarter. There are some economists think we could see a 0.4% number this morning. Others think it could be as high as 0.6% growth in the September quarter. So we'll be getting the numbers in the next sort of 5 or so seconds from the Australian Bureau of Statistics. Just looking at them now, we've seen GDP growth of 0.3% in the September quarter, so slightly below what the market was expecting. We've also seen GDP growth of 0.8% in the quarter. So the expectation was 1.1% annual growth rate for Australia's economy to the end of the September quarter. Instead, it's actually come in below market expectations at just 0.8% growth. So I'll just bring up the media release from the Bureau of Statistics. It says Australian gross domestic product rose 0.3% in the September quarter and by 0.8% since September 2023. The economy grew for the 12th quarter in a row, but has continued to slow since September 2023. It says the strength this quarter was driven by public sector expenditure, with government consumption and public investment both contributing to growth. Also, it says here, that refers to the high level of government spending from both state and federal governments. It says GDP per capita fell 0.3%, falling for the 7th straight quarter. So the big thing is here, government spending was up, household spending, which is a big part of Australian economic growth figures, that was flat in the September quarter. You can see here, you've got, it was 0.2% growth on a quarterly basis. It's now gone up to 0.3% in the third quarter, but annual growth, the end of June 30, it was at 1%, which was weak economic growth for Australia's economy. Now it's gone down further to just 0.8%. And you can see the quarterly numbers on the screen here. We had some stronger results coming out of the pandemic around 2022 with some big increases over the 3-month period. But now quarterly growth has been pretty weak and annual growth is even weaker than expected, Kieran. So a bit of a surprise here with the numbers that have just been released by the Bureau of Statistics this morning.
Yeah, it's come in less, below what market expectations were. What about RBA expectations? They're set to hold a final meeting, their final cash rate decision of the year next week. How will the central bank interpret the numbers?
Look, I think these numbers throw a bit of spanner in the works here because economists were expecting economic growth to be quite a bit stronger than what it's come in at. So remember, the Reserve Bank, their forecast was for economic growth in this year, so by the end of December this year, to be 1.5%. Right now, at the end of the September 30 quarter, we've got economic growth at 0.8%. So on the RBA's predictions, they must be expecting economic growth to really accelerate in the final 3 months of the year, but I don't necessarily think we're going to see that. So we could have some economists now really considering their forecasts for when the cash rate might be cut in Australia, because clearly it's showing that Australia's economy is not doing as well as expected, and household spending has basically been pretty weak, which is one of the main things that holds up economic growth, household consumption. So they could potentially start to see some economists coming out with new predictions for when rates could be cut. A lot of them did think it was May. We might potentially see rates potentially cut a little bit earlier in the year now due to these weaker than expected GDP figures.